Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. I just put that promo code, by the way, in the chat there for you if you want to check that out. Boom. Man, these stream layouts look so good. It's crazy, man. You know, just a little bit of context. I started doing YouTube in 2018, and it was just me. It's just me. And it's like now I have all these wonderful people that help out with the live stream. We have all these guests that come on the live stream. We have a wonderful community of serious traders on here. Man, it's cool. It's sometimes very surreal for me because I'm like, man, I started doing this in my college bedroom, just sharing my thoughts and opinions and my trading journey. And here we are years later, and we've made a serious community out of it. It's awesome. Hope you guys are doing well. Happy Friday. Hope you have something nice planned for the weekend. Let me see. Can I show you guys? I'll just show you a little something I was working on yesterday because I'm really proud of it. It took me 4 hours to put together. I put together in my home gym. My wife and I have been working on a home gym. Can you see this? Let's see. See that? There you go. That contraption is a hack squat and leg press machine. I am trying to get, you know, more and more serious about my physical health. And so we bought and crazy, man, like in today's age, Amazon is just incredible because that machine costs me $700, which I know $700 is a lot of money, but think about this, $700, it is heavy. It's a lot of stuff. Free shipping from Amazon, and just crazy. Like today's, you know, some things have been made way more affordable over time through products and services like on Amazon. It's just really cool. Anyways, I'm watching gold, as you guys might have suspected. It is definitely actually right now it is currently floating the best trade I've ever had. And I keep reiterating this concept, but this is the best trade that I've ever had. However, in order to capture this type of move, I have also had to sit through a lot of losers, small losses, small wins, etc. Are we going to see $5,000 gold today? Let's see. That gold trade has given you a blessed new year. Thank you very much. Yes, it has been a pretty incredible move. And I do want to see it keep going. If you take a look at that 4-hour chart, here's the update on how I'm managing the position. So I entered into gold here. You know, I was getting some questions about like, how did you catch this entry? And it's really not that magical. We had a really simple technical setup, nice overall upward trend. Moving averages were all aligned. We came back and retested a support area and the 20 period moving average. Okay. I actually played the 20 moving average twice in recent times. Right here, I went long. I ended up taking profits. And then I got back in at the 20 period again. And I've been staying in this trade. Now, one thing I want you to think about is there's nothing magical about that entry. The 20-day moving average, there's no magic there. Because yes, it worked here. Yes, it worked here. Almost worked here. worked here, but didn't work here, right? And if we scroll back, there's plenty of instances where 20 period moving average worked here, didn't work here. So what I'm trying to get to is the technical entry behind this trade is just one little component to what made this trade what it is right now. Nick, what are your most traded assets currencies in 2025? In 2025, it was a lot of gold. It was a lot of stock indices. I didn't trade the dollar very much. I traded a lot more other currencies. So yeah, we'll see. Should we expect a 10 to 30% fall after gold hitting 5K? No, we shouldn't expect anything in terms of markets because we never know with certainty what's going to happen next. Right now, I think gold can keep going, but I do not think that the 5,000 level is some sort of mystical, you tag that and then we have to crash from there. I don't think so. Right? Why? Why not? Why wouldn't 5,000? Well, 5,000 is a big psychological level. Could we very well come up into 5,000 and see some profit taking? Sure. But remember, this move is not technicals alone. Technicals is one component of why gold is doing this in the first place. Why is gold doing this in the first place? If you don't know why gold is actually moving, and you say, well, 5,000 is a big number, so that's where it's going to crash, then you're missing something really important in the full picture of what is driving this price. Gold is moving higher for a number of reasons. One of the most concerning and obvious reasons is actually the rise in long duration government bond yields. We see national debts internationally still very high. People are worried about geopolitical conflict. Here's the Japanese 30-year government bond yield. The European Union's government bond yields rising. UK's is a little flat here because they've got some economic worries, but also high inflation, low growth. Still elevated UK government bond yields as well. Gilts, right? If we take a look at Chinese yields have been moving lower. India, I was also looking at just some Asian yields as well. But a lot of Western nations, especially, who have very high national debts, continue to see long end of the curve borrowing rates remain elevated despite the Federal Reserve and other central banks cutting interest rates. Look at this. The European Union has cut interest rates aggressively. If we take a look at economic data, interest rate data, let's take a look at some stuff here. We'll pull up, US has been cutting interest rates. Take a look at Europe. Europe has been cutting interest rates. I guess they haven't cut rates for a while, but interest rates in Europe have been cut. UK is trying to continue cutting interest rates. So when we look at this, we've got rates coming down and yet government bond yields on the long end going up. What is this telling you? This is telling you that bond investors are selling long duration bonds in these places, Europe, US, Japan. The reason they may be doing that is because they're worried that they're going to get eroded out of their yield by higher inflation. I was having a conversation with my dad this morning, and we're talking about just how like the bond market is probably the most important market. It's probably the most important market of all of them. Gold is sort of a front and center piece of the underlying bond market in a lot of ways, but high national debts, geopolitical uncertainty, expectations of elevated inflation, central banks cutting interest rates. It's a gold sweet spot out there. Can you show the put to call ratio on gold and silver, please, Nick? Yeah, let's look at that. I would love to do that. Let's do that. For my friend Javid, I hope I said your name correctly. Javed or Javid Ali. Check this out. Let's take a look at gold here. S&P 500, you can see getting close to high call volume. Okay, so interesting. Gold, this was the reason, by the way. This is why gold on Edgefinder score jumped today. It's because of this reverse in psychology here in the last few days. What we can see here, guys, is a jump in put volume. Interestingly, let's get our dates right here. January 22nd, that is yesterday's trading volume in the options market, specifically on the ETF GLD. We saw a large spike in put volume. So put volume, let's just look at GLD for a second. Put volume spiked yesterday, which is interesting because that's just straight up counter trend. So crowd sentiment actually trying to fight this move, it seems like, in gold. So if I show you guys what I'm looking at is the put call ratio. If you need to pause the stream, zoom in and read what I'm looking at here, feel free. We've got these little tutorials all across Edge Finder that I'm working on to make it a little easier to understand what each metric that you're looking at is telling you. By the way, this put call ratio is automatically factored into the top setups and scorecard calculations for the assets that we talk about on these streams. So when we see gold getting a high put volume threshold, this red line, what we use is we use standard deviations to analyze the put call ratio, the daily ratio. And we take a look at that and we say, if we are above usual activity in terms of options market in the put call ratio, that's telling us there's a high amount of puts trading on the options market. That's telling you that people are more bearish. People are betting or buying insurance on gold. They're betting against gold, etc. That's what we're seeing in the options market right now. I'll come to silver in just a second. Let's talk about gold. So gold, interestingly, is up. And what maybe we saw a lot of that put volume yesterday during the intraday selling. Actually, am I wrong? Okay, I'm getting my days mixed up. I take it back. There was pretty much no intraday selling yesterday. There was just straight up buying. Really interesting that during this window here, guys, during this window, the crowd was buying puts, which is, by the way, if you're unfamiliar with options, puts are bearish bets without getting too far into their contracts to essentially short the market. So people were shorting gold yesterday into this print. So we had an up print all day long in gold yesterday, and yet crowd sentiment was betting against it. That makes me more bullish. Crowd sentiment is trying to bet against this thing, and it's just going to keep ripping people's stop losses, in my personal opinion. And if that changes, we stop out, we trail out, we get out of there. But for now, yeah, wow. Let's take a look at silver. What were people doing with silver yesterday? Silver had huge put demand in recent days. This is interesting. Somebody out there is hitting the bid on puts right now when it comes to silver. Is it JP Morgan nailing puts? Are they betting against gold and silver? Who knows? This is just sort of a conglomerate of the options market. However, put volume did cool off a little bit, still elevated though in yesterday's trading action. This is going to be looking at SLV options. And so what we can see here is that when we look at SLV, we took a look at the precious metals. Again, they're out there buying puts in an up print. And I cannot justify trying to bet against this market. And I don't know why there's so many people who are just convinced gold and silver are about to crash. And I just don't even know what to say about it anymore. We've been saying this for 3 years now. People have been betting against gold and silver, and they just keep losing and losing and losing. And eventually, hey, gold and silver will move lower. But do you really like the US? Do you like fiat currency more than gold and silver? By the way, I don't know if you guys saw this. I thought this was really interesting. If you price the US stock market in gold, did you know, this is crazy. If you go back to 2004, right? If you priced the stock market in gold, imagine back in 2004 when we were playing Call of Duty or whatever, if instead of playing Call of Duty, if instead of buying the US stock market in US dollar terms, which has had an incredible return in fiat currency, if you actually bought gold, you would have done better. it's kind of an insane, because you think like, oh, gold doesn't yield anything. It just sits there in your, shoebox collecting nothing but dust. And yet, a lot of the stock market growth, I think, is a little bit misleading in the sense that it's also just people's purchasing power of their currency over time has disintegrated. The purchasing power of all fiat currencies, maybe not the Swiss franc. I don't know. Swiss franc's been so strong for many years, but most currencies, right? You've lost purchasing power over time. This is S&P 500 priced in gold, right? It's been actually down over that period of time. So anyways, I thought that was kind of worth mentioning here today as we look at gold, and it's screaming higher. Gold has yet again, for the 100% win rate strategy over the history of humankind, continues to show that it is capable, it is strong at holding value amidst fiat currency creation. Really interesting. Make a video for the stock channel. Trust me, I want to, man. My schedule is insane right now. I want to make more stock videos, but we support a software company. Behind the scenes, I'm running a software company. I've got this YouTube channel, live streams. I want to make more content about stocks, but there's only one of me, and I can only make so much stuff. And right now, the schedule is booked. I want to make more stock videos. I just don't have a lot of time to do it right now. Anyways, yeah, so that's gold. Taking a look at silver, price action wise, looks incredible. You're back to the all-time highs, and silver's there, man. Silver is just about to tap $100 an ounce. Absolutely monumental for the precious metals world. Crazy stuff, man. Gold is stone's throw away from 5,000, silver 100. And good question earlier. Someone asked, when gold and silver reach these milestones, 5,000 for gold, 100 for silver, if they get there, then do we have some sort of unholy reversal where we give back a ton of gains right at the $100 an ounce mark? And again, I kind of went on this rant of why I think no, price is not in charge here. Macro is in charge here. People are buying gold because they're worried about fiat currency destruction. They're worried about high national debts. They're worried about geopolitical events. People seem to be moving away from US dollars and US treasuries in some way. And so they are moving to alternative places like gold and silver. That flow of money doesn't just stop just because you hit $100 an ounce, right? If you make that conclusion, then you're living in trading land, whereas great trading means living in the real world, where we look at macro, we look at the real world stuff that's actually driving prices, and we trade around that. If you're living in technical analysis land only, then gold and silver were way too extended way long ago. If you're living in macro land, then you know very well gold and silver can keep going, right? We don't know that for certain, and we never have certainty of what's going to happen next. We make educated guesses and base our trading on probabilities. But again, technicals would have told you these things are way too overextended years ago. Macro has told you they were cheap and they're just catching up and may still have room to catch up. I made a video, and I got a lot of response from it months and months ago about how I thought at the time gold and silver were still cheap at all-time highs. And I still think right now gold and silver could potentially be cheap in the longer run. Macro is everything, man. It is what drives markets. And if you are ignorant to why markets are moving a certain way, then you're going to be blindsided when the story changes and you're still looking at technicals. Again, technicals are the definition. People are always like, oh, price action's king, indicators are lagging, all this other stuff. Look, technicals are literally lagging 100% of the time. You're always looking left of stuff that already happened, right? So when we talk about macro, you're trying to gaze into the future. And you kind of do that with technicals too. You look at historical patterns to try and make a prediction of the future. I get that. I'm not saying technicals are useless. I'm just saying that macro studying of history is where you can build a conclusion that is, you know, you're making an educated guess about what's going to happen next in the story of markets. Anyways, Nikkei pulling back here a little bit. So yesterday had a nice little follow through from the bounce that we saw. I did trim my stop loss. So I initially had my stop here. I cut it in half to reduce my risk on the position. I would like to see this thing bottom out and push through the highs. If this does happen, then I will take this stop loss that I have here in red and I will move that into profit. But for now, I'm going to do nothing with the position. And if the Nikkei rolls over and just scratches through the low, then I'll still just take a small loss on this one, and I'll move on to the next trade. But I am looking for any sort of breakout to fresh highs. If we can get that to take place, then my stop loss will get ratcheted into profit. That's where I'm at with the Nikkei for now. Let's continue because I've got a couple things to look at here. Take a look at the Russell 2000 index. Really nice push from the Russell. The Russell is leading the market right now in terms of US indices. Nice little push there. We have support holding really well and continuing to break through to new all-time highs. I'm looking for any sort of higher low here in order to continue to trail my stop loss. Wouldn't mind if the Russell wants to pull back to this little prior high here. If we come down into that area today, tomorrow, etc., if you get a bounce off of that area, then I will often use my 4-hour time frame to come in and also trail stops. So I'm looking at this as a potential area of support. If price comes down into that area, I'd be curious to see how we react there. But yeah, I'd like to see a higher low on the 4-hour before I trail any further, because you could also get kind of this move. And so I'm just going to keep my stop here. I think you have really solid support on the 4-hour. I think on the daily time frame, again, daily time frame, I don't want to just get in the middle of this because this could come down here and retest all sorts of this area. So I don't want to try and tighten my stop too much. I do really like the Russell story. I think it has potential. I think that they're going to run the economy hot. And what that entails to me is that industrials, healthcare, like a lot of these, regional banks, I think could benefit, which is very heavy exposure in the Russell 2000 index. Lower interest rates, strong GDP growth, stimulus from the administration, I think can continue to make the economy run hot. We're talking about potentially seeing 5% GDP growth in the US, which is massive if that happens. So you could have a quote unquote run it hot economy. Can we talk about that for a second? Let's talk about what run it hot economy means. You hear that from the White House, and what does that even mean? What is the strategy to run it hot? Because don't all presidents want the economy to be running hot? Well, yes, but run it hot economy, what's happening actually kind of in Japan, they're trying to boost. They've finally got some growth. They want to really fuel that flame. Same thing in the US. We've got growth here. They want to keep that flame running hot. So what does that mean? What does run it hot economy mean? Well, it means rates. Let's do rates. Let's do interest rates. So we'll do interest rates. We'll do inflation. We'll do growth. Okay. So if this is the idea of the current administration, and again, leave your politics to the side for a second if you like or dislike the White House. I'm just trying to make an economics kind of outlook based on at least the strategy set forth by the White House. Interest rates, they want them down. Inflation, they want it down, but I think they're going to have a hard time keeping it down because they want growth strong. If you have strong growth, it can cause all sorts of inflationary pressures to remain elevated. So I think you could have this scenario where inflation remains sticky, interest rates come down, GDP growth and et cetera stay elevated. So what does this mean for markets? Obviously, there's criticism to this. Oh, this is going to, benefit the wealthy class because, people who have assets will do really well in this environment. People who do not will not do as well in this environment. Interest rates coming down will make prices of homes more affordable for people, but also at the same time expensive on a nominal basis, right? House prices can go up. If you have high growth, low interest rates, if people are employed and interest rates are low, house prices potentially go up. Anyways, inflation can be elevated by strong growth. Now, one of the things here that is tricky with this is the let's just do this. National debt in this circumstance. What happens here? Boom. Up and away. Okay, so let's analyze what we're talking about here. Run it hot economy. Trump administration seems very keen on that. Tax cuts, low interest rates, spur economic growth, get the economy humming, right? Everybody wants a strong economy. There's side effects to this approach that are pros and cons, okay? The positives, strong growth means probably people are going to get jobs, people are employed, people, they are productive. The economy, if this strategy works, jolts forward. The U.S. is on top. We lead the AI trade. Innovation stays here. Economic activity improving is a positive. Now, what's a difficult one is inflation, right? This is almost like the Ronald Reagan type approach where you've got this like super strong growth, but at the same time, inflation can remain elevated and national debt can also skyrocket. By the way, Japan's kind of in the same camp. They want high growth. They're reluctant to raise interest rates. Inflation is rising and their national debt is out of control. Interestingly, that's kind of like a similarity between the US and Japan. Of course, with nuance and specifics to each side. But what does this do? Well, stocks look good in this environment. Commodities look good in this type of environment. Bonds, not so much. Why? The bond market's saying, okay, growth, strong, so let's go into stocks and other places. Why would we sit in a safe haven like bonds when we could go get more yield on stocks? And industrial companies are going to go crazy. There's all this excitement around stocks. Okay, go to stocks. Why would I be in bonds? At the same time, inflation higher. Well, sell my bonds because inflation, if it's higher, then I'm going to get less real yield. Go back to real yield. We talked about that yesterday at length. We're going to get less real yield from U.S. bonds. So get rid of bonds. Interest rates are going to keep coming down. So why would I buy bonds today? Or actually, I guess that's opposite effect. This actually is kind of supportive. But here's the thing. I think that interest rates coming down is going to be limited by rising inflation. So anyways, we are going macro super cycle here today. I hope this is not making this too hard to understand. Can you guys give me some feedback really quick in the chat? Give me a 1 if this is making sense. Give me a 2 if this is just completely foreign language and I'm not making sense. If you could give me that feedback by dropping a comment in the live stream, it would really help me out. I want to make sure that I'm explaining this in a way that actually is resonating. And if I'm not, then we'll see you next week. And I won't even do it next week. So it's ones or nones as far as I'm concerned. 2, but mostly because I just got here. Okay, fair. You can rewind if you need to. These streams are uploaded to YouTube so that you can rewatch if you need to. Okay, we got lots of ones. Thank you guys. Cool. Okay, I'm glad that that's making sense. We're analyzing the run it hot economy in the United States. Oh, and by the way, I think I'll probably clip this into, or the producer will clip this in today's video because I thought this segment was pretty important in regards to the quote unquote run it hot campaign that the White House, the administration seems keen on doing. And by the way, also Japan. I think Japan is in the same camp. So I see national debts keep going higher. That's not a very bold claim. Everyone kind of assumes like, yeah, national debts go up every second, Nick. So, but I think that national debts could actually go up a lot. And I know the White House is like, we're going to pay down the national debt. Those are big claims, man. And I don't see that as a complete possibility. Look, I actually, just to state my claim on this or my opinion, I think run it hot economy is the way to go. Because our national debt, we can't sit still, right? We have to grow our way out of the national debts. If you don't, you just get eaten alive. Like, if you have low growth and high national debts, Europe, like that's a difficult circumstance, right? Because you need growth in order to pay back your debts, in order to outgrow your existing debts. So I think the U.S. is on the right. Like there's no easy answer. Inflation stinks. It's not fun for people, but I also don't know of another solution. You can't just get eaten alive by your national debt and get destroyed. Anyways, that's all I've got time for here. I hope that made sense. That's my general outlook in terms of the White House. If you turn off the Trump Truth Social post for a minute and just kind of look at, generally speaking, what the team there in the White House seems keen on doing. And they do have a lot of power to kind of push that agenda by putting in the right Fed chair for their agenda, right? Not necessarily the right or wrong, just for theirs. And again, I'm not trying to be political. I'm just trying to outline, okay, I think that's where the puck is moving, right? Let's follow where the puck is moving, right? That's a hockey term, as if I know anything about hockey. I don't. Anyways, up next, we've got Forex James taking over the live stream. Before we do that, just a reminder, if you guys want to join our VIP group, if you want to see trades that we are taking, VIP is currently 40% off. We just kicked off a sale here this week to do memberships at a low price for the new year. If you want to come trade with me, it's a lifetime membership. So basically you pay once, you're in the group, and you can trade with me for maybe decades to come, God willing. If we could keep doing this for a few decades, if you want to do that with me, would love to have you in the Discord. Memberships, we offer one-time payment memberships, so you can come join us. And we've had people in there for 5 years, 6 years, 7 years even, believe it or not. I think I started a Discord with people in there that are still active 7 years later. So anyways, if you'd like to join us, I'd love to have you in there. We'll drop a link here. Boom, there it is. 40% off sale is happening right now. Send a team member a message about that discount right here in the live stream chat. If you have any questions or if you need a payment plan, etc., just come join us. We'd love to have you. Up next, Forex James. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. Happy Friday. Hope you're all well, and I hope you all have had a fantastic week. So as normal, I don't do that much on a Friday in terms of new trades and research. I normally save that for the following week. The end of the weeks for me generally lean towards more management and just overviews and things like that. So in terms of positions, the pound Australian trade is still open. I'm still waiting to see if we can have a retracement here towards the sorry, my mind's going blank. A retracement towards the 61.8 or the 50% fib level. One of those two, if we could see a pullback. I was mentioning yesterday that I would like to see it, or I would expect to see it slightly higher on the retracement scale, if you will. Typically, I will look for 50%. In this case, I think I would actually be more leaning towards a 61.8. And the reason why, I mean, it's not a huge difference, but if I can improve the entry by a few pips, why not do it? So the reason why is when we have aggressive sort of impulsive moves like this, the likelihood of getting a correction is significantly higher than if it was more of a sort of choppy trend. Does that make sense? So because this was such a large, quick move, rather than it just being a small 50% pullback and then continuation, I would expect us to come and correct a little bit more of this move, potentially even slightly higher, and then continue to the downside. On a fundamental aspect, this is still a very high quality trade. We did have retail sales come out, in fact, significantly higher for the UK this morning. Hence this candle right here, this bullish one. We saw that echoed across the markets. If we look at euro pound, other pound pairs, you'll see the same reaction. But it's not really changed the overall idea. Sluggy, hello. Jeremy, hello. Shells, cycling, good to see you all. Yes, happy Friday to you too, Shells. What do you think about New Zealand dollar Swiss and Uber? I've got no idea about Uber. I don't trade stocks, but we can have a look at New Zealand dollar Swiss. Yeah, Sluggy, that it's not changed my idea. Yes, it was a small bolster, but everything else is still completely intact. So New Zealand Swiss, let's have a little look here. Still getting a very bullish reading on the edge finder of 12. So what do we have here? So trend is bullish, seasonality is against us, COT is against us. That's maybe key, not for me, but if you like to have COT in your favor, that might be something to note down and look at the COT history. So you might want to go and look at, although they're bearish, what's the context behind that? Have they been super bullish and then they've just decreased some positions, or are they increasing short positions across the board there? Retail is short, which is a tick in our favor for bulls. GDP, PMI, manufacturing PMI, services PMI, retail sales, CPI year on year, PPI, and unemployment, all in favor of buyers. So on just an edge finder reading, I think we could be looking at something actually quite simple now. So I wasn't really a fan of this market at the start of the week because we were kind of just sluggish down here. Not good. You can't really trade this. Well, sorry, let me rephrase. I can't really trade this because it's just a range. I don't trade ranges. I need expansion and development and clear direction in the markets. Now we've had that. We've had this move. So that tells me we've had buyers come in. Again, we've got the fundamentals that are bullish. So that now we've got two factors. We've got the trend that has just established itself. And yeah, as I said, the data is supportive as well. So that leads me to be actually quite happy to look for long positions at this point. So I would expect, when I say expect, it's more what I would want to see from the markets in order to get me to be a buyer. So here we go. So let me zoom out, sorry. Double top, nothing crazy. I'm not a huge top and bottom trader, but in cases like this, it's quite natural to have some sort of retracement off this and then possibly the break and retest. That's what I would be expecting here. Double top. Some bulls take profit. Bears might step in for a sort of mean reversion trade, whatever it is, doesn't really matter. Pull into the moving averages or revert back towards the moving averages, fill into towards 50%, give or take, and then come higher. Now, unfortunately, the fib doesn't really line up with any previous structure, which is a bit of an issue. When I'm trading off a fib zone, I like to have previous structure just to support this level a little bit more. It's not overly necessary, but again, it's just layering those little confluences on top of each other eventually lead to quite a strong entry criteria. So that would be my approach. But yeah, I don't really see any other way to go about it. I suppose on the other side, you could, if we didn't get this sort of pullback, you could wait for the break and enter on a retest here. And this might be a fib retracement from that low. So there you go. What's your thoughts on Aussie New Zealand? I'm actually in Aussie New Zealand, so I'll show you that in a second. Same from my end, weak pound narrative still continues. It does. Hello, James, thoughts on gold short term? Yeah, we'll have a look at that as well then. Okay, so Aussie, New Zealand, this is my position. Now, this was a little bit difficult because the entry, I went over all of this trade yesterday, so I'm not going to say it all again. But it was technically a valid entry, but barely. Yeah, not super strong, but also not a terrible idea. The fundamentals for Aussie New Zealand, in my opinion, are still very bullish, which is why I've held it, because my bullish idea hasn't been invalidated. It was just the technicals weren't the greatest. So if we look at it now from an objective view, we've got the fib from the low to the high. Price came all the way down into the fib and this previous high over here. Really nice rejection, continue to the upside, move back down, and then again, we'll continue to the upside. So what I'm also seeing from this is this 200 moving average is remaining bullish. We've had two opportunities now here for bears to step in and take control. They haven't done, and buyers, again, have pushed this market up. It seems like there's a little bit of a fight between the two, and so far, buyers are winning. But yeah, fundamentally, still a very bullish market. And if we have a look on a higher time frame, we can look to see where the next targets are, because as I always say when we look at this market, because the two economies between Australia and New Zealand are very correlated, typically we can just expect this range-bound sideways price action. Obviously, this is a weekly time frame, so intraday short-term swing trades, you can absolutely trade this. However, the fact we've broken out of this is a clear sign that the fundamentals are serious enough to warrant buyers stepping in and risking that mean reversion all the way back down to sort of the medium or the average price of this range. So I would be looking for, what level would this be? Actually, that's where my take profit already is. So around the 1.21714, I think, just because that on the left side, that is the next level of structure. Beyond that, you could probably just trail stops and let the trade run, because this market is trending for a reason, which doesn't always happen. 199 for the A1 coffee fund. Very nice. Buys New Zealand dollar, Swiss, Australian dollar, Swiss pound dollar. Very nice. Good position. I think all of those markets are doing very well now, so you should be in profit. So thoughts on gold short term. Let's see. Just bear with me. Here we go. Yeah. I don't really have anything for gold. I think the only thing, guessing stupid PA on dollar yen was due to monetary policy statement. Yeah, I got stopped out. Actually, I'll move on to that. Actually, I was supposed to get stopped out to break even and got slipped. Anyway, so yeah, gold. I wouldn't be buying it here. It's even on the H4 too extended for me. I would really just need to see it pull back to the level down here. So the previous, or I guess the previous low, and also the old all-time high. That would also allow a little bit of a mean reversion towards this 200 moving average down here. It would allow the bulls to take profits and sort of reset a new bullish trend, if that makes sense. And if we're also just looking and accounting for the general behavior of what we can expect from major liquid markets, these gaps don't always, or very rarely, get left open for an extended period of time. So I would expect this gap to get filled. However, I think we would need something to happen at this point. Since then we have rallied quite a lot. So whether that be, I don't know, de-escalation or a massive bullish event for the dollar, I don't know. We'll have to just wait and see. But yeah, this is a bit of a concern for me, the gap. And the new link for the new Elite Traders mentorship has just been dropped in the chat. So I've been working for the past couple of months on a mentorship, which basically teaches the economics, monetary policy, how all of these things that you see, things like what Nick was talking about earlier about the run it hot economy, things that I talk about, all of these external factors from the market, how we can identify them, use them to come up with trade ideas, execute them on charts, weekly one-to-one calls, all those types of things. So if you are after mentorship and you want to work with me, feel free to send an application. Yes, so dollar yen, let's go over that one because yeah, that one was a little bit nasty actually. This morning, was it this morning or last night? I'm not 100% sure what time it was. It was either late last night or early this morning. So we had a position on dollar yen about here. We moved our stop loss to break even right on this candle here, just to avoid, obviously we had this pretty nasty H4 candle as a bit of a concern. So we just moved our stop to break even here and just let the trade run. So that's what happened. And obviously, you can see it initially went quite nicely on this wick, really nice bullish candle. However, the market just, I mean, what would you even call it? Just a lot of movement very quickly. So yeah, I was slipped out. So I lost not a huge amount. It was like 0.35% loss rather than a break even. It could be worse. The way I'm looking, it's one of those things. It was very frustrating. However, if I didn't move the stop loss about an hour or so earlier, it would have been a full 1% loss. So, either way, I lost more than I initially risked on the position. So that's how I'm justifying it in my head or making myself feel better. CAD yen. I've not looked at CAD yen in a while. Let's have a look. Yes, really nice actually. Yeah, I mean, it's very simple trend. I think the idea of just selling yen, buying other currencies, using it as the funding currency, that's not changed. What else is there to do? Dollar yen, pound yen, euro yen, CAD yen, Australian dollar yen, so on and so on. The theme's not changed. It's basically just buy on pullbacks. Not financial advice, of course, and is context dependent, but generally speaking, it's pretty simple. PMI is out. I don't see PMI. Hold on, I've got red folder only on. Maybe I need to put. Yeah, no, I don't see any PMIs. Yeah, I'm not sure where you're looking, unless my calendar doesn't have it. So euro pound, let's see. I was looking to be a buyer of euro pound. However, I can't really find any entry at all. So if we look on the H4, we have a really nice downtrend actually. So it's pretty clean. Pullback, sell, pullback, sell, and pullback, sell. So, what more would you really want? The fundamentals, maybe not so much now. Actually, I've benched this idea, so I'm not really keeping up with it this week. But last time I did my research on it, it was actually quite bullish. I don't think that much has changed. So if we use the weekly, we've actually just established a bullish trend, and just using the moving averages to determine that. So we've got two counter things here. The weekly is bullish, and the fundamentals are leaning bullish. But the H4, which is where I execute positions, is bearish. So I cannot get into a trade just yet. So it's a case really of just waiting to see, can we come back into this level of support? And if we get a nice clean rejection from there, then I'll look to potentially be a buyer. Obviously, I'll need to reassess the data and the situation. Now, on the counter argument for that, as I said with the Australian dollar, New Zealand dollar, both of the economies are quite correlated. So it's not often you will just see these parabolic trends without some sort of mean reversion and correction. So you can see here, really nice move to the upside, and then we just continue lower. It's just overall very sideways. So what I'm a bit concerned about is this might be the start of the next corrective move, or the next sort of mean reversion move, if you will. Now, I'm not really a mean reversion trader, especially on higher timeframes like daily and weekly, but something to keep in mind if you are wanting to be a buyer. So we did get US news. Why can I not see it? Let me refresh. Oh, wait, hold on. Oh, I do see it, do I? No, I don't. Weird. All right, whatever. Let's just take a look at the dollar then. I guess my calendar must be missing something. So what was the result? USD PMI, I mean, oh, you mean it's coming out. Okay, so I didn't miss it. Right, fine. You had me a bit concerned there. Yeah, the UK did well, Bashi. Not bad news at all. However, it doesn't change the idea. I think we can still sell the pound, especially with the Australian dollar. I think for the next, well, really until we've got other notice or other news, the Australian dollar is still a very easy buying currency. It's the most hawkish central bank out of the DMs, which is the developed markets. And it's still got relatively high rates. So, why would you not want to just buy and hold it against weaker currencies or currencies with dovish central banks? The DAX. Yeah, let's take a look at the DAX. If I can see it. Oh, right there. There we go. Being blind. If I'm here, I got you for news, James. Yes, I know, Bashi. You're always on me about news. Appreciate it. Yeah, I'm still bearish on GBP. Did you see my comment earlier about Bank of England rate cut stuff? No, I didn't, Bashi. CAD retail sales beat expectation. Interesting. Okay. CAD JPY up. Hi, James. Both services and manufacturing came pretty much in line. Okay. I'm going to have to just get a different calendar open. Bear with me. Is it FX Street? I've not used a different calendar in months. Is it FX Street that's got a good one? I don't want to use Forex Factory because I've seen people having problems with their data recently. People in my Discord were complaining that they were seeing the wrong results yesterday. Oh, yeah. Okay. So S&P Global Manufacturing PMI came out to 51.9, which is, down from forecast. So Edgefinder will give that a bearish reading. So a little bit of contraction on that side. Services PMI is 52.5, which is also a decrease from consensus. However, on the slightly brighter side, manufacturing PMI is at 51. Actually, let me just put it on screen. There we go. So you can see it. So yeah, manufacturing PMI came out at 51.9, which, as I said, is lower than consensus, but it's still slightly above previous. So it's a bearish event when we use the Edgefinder surprise meter, but I wouldn't read it as a massive bearish signal, really. And the same for services, actually. Still an undershoot from consensus, but it's not changed from previous. So although not the best news, not really what the dollar bulls will have wanted to see, I wouldn't say it's terrible. Could definitely be worse. And keep in mind, the sort of baseline is above 50. We're seeing, as long as it's not below 50 or doesn't come out below 50, then it's still relatively okay. Professional analysis for you there. FJE, what's that? FJE. Not sure what FJE stands for. Okay, so how long have we got left? We've got about 6 minutes, give or take. Yes, Bash, you are correct with that statement. So yeah, copper. I mentioned copper to you guys yesterday. It seems like I may have missed my opportunity to be a buyer. We were looking pretty much at this level right here where we saw this bounce off the 200. I was listing off a few reasons to be a bull and to maybe justify being a buyer of copper. The downside of that is I didn't have a full thesis for me to feel comfortable actually buying it. Hindsight, maybe I should have just done it with a low position size, but yeah, it depends. My risk tolerance on DCA positions and on markets I don't trade. Yeah. Do you get what I'm saying? So if there's something like euro dollar or dollar yen or G10 FX, then I'm a bit more comfortable. I understand the dynamics sort of day to day. Whereas something like copper, it's not my main market. I'd have to research it fully to feel more comfortable. Okay. Financial juice, what you get with elite. Financial juice elite. Oh, right. Okay. Yeah, financial juice is good. Although I don't really need it for headlines, but yeah, I'd say it's still a very good free software as well. So my S&P position is still open. Aussie New Zealand is still open. Pound Australian is still open. Overall, nice little profit, but nothing overly exciting. I would expect Pound Australian to start turning around next week. Again, it just looks it, just due to the price action. We've had the move, a little bit of a correction, a little bit of a pullback, completely natural and normal. So I'd like, again, as I said earlier, I'd like to see a pullback into the fib, a rejection, and continue lower. If we get that criteria, so we come in and then we see a rejection with a bearish closed candle rejecting off the fib, the first position stop loss will be trailed and I will scale in. So what that will do is it will reallocate the risk from the initial position into a new position and also decrease the risk on this one because this stop will have been trailed a little bit. So rather than having 1% risk to essentially double the potential outcome, it would be, I'm not 100% sure exactly what number yet, but maybe something like 0.8% risk, 0.7% risk to double the potential outcome. Okay. Are you talking about Elite Trader Sluggy? I have no idea. Anyway, ladies and gentlemen, I am going to head off and call it a day. Remember, my mentorship has soft launched today. So if you are looking for education, you're looking for more of a personalized one-to-one experience, learning markets, strategy, economics, risk, portfolio management and construction, etc., etc., feel free to send your application in. They are reviewed. We don't accept everyone because it's one-to-one. It takes a lot of time. Anyway, guys, enjoy your weekends. Have a good one. Stay safe and don't get margin called. I'll see you all next week. And thank you for being here. I'm not sure if anyone's on after me, by the way, so maybe don't leave just yet.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hey everyone, yes, it was me coughing. I realized actually that I had my mic unmuted and I was wondering if the audio was still open when the ad was going on. So yes, that was me, my fault. Nick was not coughing or anything. Next time I'll make sure to have my mic muted. But yeah, interesting thing happened here overnight. Look at this currency strength chart here. Can hear you, but the audio is bad. Let's go ahead and verify, have the mic correct here. Of course I don't. Give us 1 second here. I know exactly what it is. This tends to happen when I switch headphones. Come on, bud. No, don't do me like this. Guys, I am so sorry. I'm fixing it. Give me 1 sec. Oh. I'm doing good, guys. I'm doing good. Let me just fix the mic because I have the it's not registering this new one. Give me a sec. Or not new one, but come on.
There it is. There it is. All right, you guys can hear me better now. I'm pretty confident here. My apologies there, and next time I'll make sure to have my mic muted for the when the ad is on because you guys can actually hear me. So thank you guys for your patience here. Interesting thing happened overnight here on the yen. I'm sure we all know. Hello, everyone. Thank you guys so much for sticking around. Look at this currency strength chart here. Look at the thing in blue. This baby blue is the yen, and we all saw this crazy move last night. I'm sure we all did. And if you go into the actual chart here, this was a 192 pip move, right? So 193, 192, give or take. Thank you guys. Thank you guys. Awesome. Awesome. So essentially, the big question on everyone's mind is, did the Bank of Japan go ahead and intervene? And that's actually not known at the moment, right? So essentially what people are speculating when it actually happened. I mean, I was asleep by this time, so I had no idea what had happened. However, most people are saying that it wasn't an intervention, but it was more of the Bank of Japan calling for a rate check. So essentially, they go ahead and see, what the price would be if they were to intervene. At the moment, they didn't go ahead and intervene, but they were kind of just seeing, what the cost would look like. Bank of Japan officials can't actually speak on this if they did or didn't. So whenever they were asked about it, there was no words there. But we'll actually see the next business day, the flow data comes out. So you actually know if the Bank of Japan actually did initiate something or not. And in this case, next business day will be Monday. So come Monday, we'll see. And usually, if you look at it like before, usual interventions are looking like this. They have a big wick candle here, and then you have the follow through, following that as well. So at the moment, this was a big wick here. Come Monday, if it is confirmed that the Bank of Japan did intervene, then perhaps you do see some follow through here. But I don't think so. I think they were just checking for rates, in my opinion. But you never know, right? You can't assume markets. You can't really speculate like that or speak in definite terms. However, that is definitely a possibility. Another strong currency that kind of shows some strength here was the pound. The pound had some good data, actually, some good retail sales. I'll show you guys here. And also for the Bank of Japan, they went ahead and held the rates to 0.75. That was pretty much expected there. So the yen actually weakened pretty quickly, and then that's when you saw that big wick. And then let's go ahead and talk about the pound. The pound came out with their retail sales. It came out better than expected for the first time in two prints here. So they were really in the red here, and then slightly, and now they are actually in the green as far as retail sales. So that gave the pound a little bit of a boost. And actually, earlier in the week as well, we did see some inflation data out of the UK, which was in benefit of the pound. So we had CPI come in hotter than expected. Also, PPI came in slightly in line there. So pretty good for the pound, right? So retail sales, the growth aspect, that's good, but then you have CPI coming in worse than expected, but worse CPI is actually good for the pound. So that's kind of what you saw there as far as the strength in the pound. So looking at other currencies here, earlier in the week we did have the Swiss franc. The basket actually weakens, and that's why I got into that dollar Swiss trade. However, now we are starting to see that Swiss basket strengthen a little bit, and so now I'm back into basically break even territory on the dollar Swiss. So kind of sucks, right? But that's kind of what it is. So we'll see if this level holds. If not, it just breaks below. But we'll see. We'll see. We tested it here, and then we came back up, and then now we're back, and then the Swiss tends to do stuff like that. So we'll see. We'll play it out. Maybe you get some strength in the DXY, but I kind of doubt it at this point, honestly. So we'll see. Aussie dollar, a lot of the strength here that we saw, or a lot of the weakness in the dollar that we saw, was basically because relative strength was like in favor of other currencies. You had Aussie dollar really strong, New Zealand dollar really strong. You had data out of the Aussie that pretty much promoted hawkish tone, right? So that's kind of what you're seeing here. I am curious to see if, what happens to the Aussie dollar once we get to this level here. Let me just clean up my chart for you guys. I'm going to remove the indicators. I have an alert here at the 61.8% retracement level if we do end up getting here. But essentially, Aussie dollar is approaching this, what could be a level of resistance. So I'm kind of watching it here. I'm not going to short it because I'm going against the fundamentals. However, I am going to be somewhat patient for a pullback. I would really like to get a pullback. I've missed it. It sucks. I made a video about it. I'm sure we all have. I'm sure we all feel the same way about gold as well. So whoever's in gold and metals, congratulations, you're killing it. But if you're not in these moves, the best way to approach it is not to actually short the market when you think there's a level of resistance or where you think it's going to return, or when you think there's going to be a psychological level like the 5,000 handle or the 100 handle on silver. It's actually to just wait for a pullback and don't fight the wave, right? Because we all know what can happen with Aussie dollar getting this super strength. And if you still continue to see maybe data favoring a rate cut for the Fed, then this thing is just going to blow right past this level, and you're pretty much screwed. Same thing with gold, right? 4,000 handle, right? Whenever we approach that 4,000 handle, this is what it looked like. I'll show it to you. 4,000 handle on gold. You approach it, people short it right here. This is it. This is that 4,000 handle. And then what happens? It blows right past. And in fact, it pulled back to the 4,000 handle, right? And perhaps people were like, hey, like, we're finally turning around. And it just kept going right up. It never got below the 4,000 handle. So imagine the pain of being in that trade. And it looks like gold's about to hit that 5,000. So whenever you breach important levels, there's actually a level of follow through that goes with it, momentum. So momentum is a real thing in markets. So definitely be careful on that front. Hey, GU, not up, down, guys. I said AD silver ETF feeler action for the BOJ. Yeah, also too could be a feeler. We'll definitely know once you get the flow data on Monday. But yeah, I mean, you don't want to put concrete thoughts on these levels, right? There's a story, I believe it was the Douglas book, about a technical analyst, right? Very, very renowned technical analyst. He was the best, and he goes on a commodity desk, and he's looking at this commodity. I forget the actual commodity, but he says, it's approaching this level. Go ahead and sell it now. And the PM, the portfolio manager, said, well, why? He's like, well, it's at this level. It's going to turn, right? And so to teach the technical analyst a lesson, and this is a real story, the PM makes a phone call to buy side and says, buy, X amount, a crazy amount, and the price just blows past the level. And it was basically a lesson to the newer talented technical analysts that said, these levels, just because it looks like a good level, it's not a concrete level. So always take that into consideration. The macro and the fundamentals will always override what you think is a strong technical level. So yeah, best book, Charles. I agree. Mark Douglas. Anything Mark Douglas is fantastic. One of the must-haves, must-reads when you're getting into trading as well. Also, if we're talking about books, Kathy Lean as well, fantastic. FX Macro Queen. This was like one of the first books I read when I was in high school. Was one of hers, Day Trading in the Currency Markets. But yeah, anyway, we can talk about books all day long. Rip Mark, dang. Perhaps they're flirting with us all. Yeah, perhaps. But as far as currency setups go, I guess the thing that sucks, right? The position that I'm in is that dollar Swiss is break even, so I can't really do much, right? Aussie dollar is approaching this level of what could be resistance, right? You got to be careful with the choice of words there. So if we do get a rejection here, I would be interested in waiting for a pullback. Obviously, the likely scenario is I'm not going to get the pullback that I originally wanted at the 6,600 level, right? I think the Aussie train has left the station in that sense. So maybe I can wait for something like the higher end of the channel, which also I think is probably unlikely. So when you put a fib from the low to the high, or what could be the high, the retracement levels are lining up right here. So maybe, similar thing, you broke, you retested, and you broke and retested. Now this becomes support. And then, you broke, maybe you're retesting, and now this level right here turns into support. So ideally what I'm looking for is something like this, a pullback into this level here, I'd be open to buying the Aussie if everything still looks like in line. But man, it sucks, man. It sucks when you miss the trade, especially when I've been pretty vocal about it. I've been pretty adamant about it. I've been annoyingly talking about it. I'm sure on the live streams like every other day, and you miss it. But oh well, that's kind of what it is. So we'll see. We'll see if we get the pullback. If not, you kind of just move on. Maybe then if we do break this level and retest it, then that's another opportunity. But you never know. What do I think about EU? EU was the best proxy for playing that dollar weakness here. The DXY was basically at that 61.8% retracement level, and then it tilted. So I'll kind of show it to you here. This was the dollar. If you're a dollar bear, this is what you were looking at. So trended lower, and then we were chugging higher here. And then this right here, I'll show it to you. That 61.8% retracement level, that was the last line of defense for dollar bears. And they took it. Dollar index got up here. They shorted that thing, and now it's trading lower. So EU is pretty much parallel in the sense of price action. So similar situation here. If you were a euro bull, look how that lines up, guys. The euro makes up the majority of the dollar basket. So, or as Tiger likes to say, the Dixie. I like that, the Dixie. But look, same thing, holds at 61.8% retracement level, and it shot higher. So this was a perfect, way to play that. The question was, how do you play the euro dollar? Well, you kind of missed it. So you really don't play it at all. That's kind of the position I'm in, is you kind of don't play nothing. You just wait it out. And also that pullback was right on that 200-day moving average as well. So it was something that I was looking at. Like I definitely knew that was the case at the time. However, my bias was more leaned towards breaking below the 200-day moving average and possibly meeting this level of support. Then I would have ultimately bought the euro dollar. So I've always been in the mindset of short-term, like very short-term dollar strength, and then looking to fade any strength. However, the strength in the dollar didn't get as high as I thought it would. So I missed that opportunity, but oh well. That's basically euro dollar. I wouldn't really put any trades behind it, just because, like, what would you do? You know what I mean? Like, maybe if you pull back into this 50-day moving average, but at the same time, like, trading it right here, buying it here, you have so much downside risk, and then your upside is almost, limited to that 1900 handle or maybe slightly higher if the fundamentals support it. But really, what euro dollar looks like to me, this is kind of what it looks like to me, guys. And so, this is the thing with currencies. This is basically currencies 101. They're mean reverting, right? So this is essentially what I'm looking at for the euro dollar. Choppiness. If you look at the dollar index, you could say the same thing, just chopping sideways, right? So you could try to buy the euro dollar, but then your upside is somewhat limited. And then you have the risk of currencies doing what currencies do, which is mean revert, and then they trade lower, right? So that's the tricky thing. But the cool thing is that there's a lot of economic data coming up. This week was a full week, and I'm sure next week is a FOMC day. So there's lots of opportunity, lots of ways you can kind of get a feel for how markets are flowing, especially when you get more clarity to the Fed's rate path and all this other stuff. Because the Fed independence was being challenged, so the Fed was more inclined to take somewhat of a hawkish stance. So those are the kind of factors at play. And then you have Greenland and safe havens and everything like that. So we'll see if the story continues to go in that direction, as far as safe haven demand, sell the dollar, sell America, whatever, or if things flip around. And regardless of the situation, I'll make sure to keep you guys informed. I posted 2 charts already for today. The pound dollar, basically showing the retail sales, the implications. British businesses, they reported faster upturn as far as retail sales, but then the actual nuances was the services component of that was kind of inflationary. So that's why the Bank of Japan or the Bank of England expectations were for trimming those rate cut bets, and that's why you saw that uplift in the pound. Same thing with the dollar yen. I kind of covered over the Bank of Japan and perhaps the intervention possibilities. So always, feel free to join the Telegram channel. It's completely free value. I'll put the link in the chat there. And also do quizzes at the end of every day to keep you guys sharp. The one I did yesterday was about market volatility and thin market conditions. And this is what I like to see. Most of you guys got it wrong. So that's pretty good, right? You guys are pretty smart, and you guys always get the majority right. So I try to keep it challenging here, and so that was a good one there. So perhaps today's poll will be even more challenging. So I definitely recommend that you join the Telegram channel if you haven't already, to see how smart you are. My friend Marco, how are you? I'm sorry, I was rambling there for a little bit.
Hello, no worries. I'm doing pretty well. How are you?
Good, man.
So what have you been up to? I saw you commented on the yen and sort of the possible intervention.
The speculation was a possible rate check, which is essentially, Bank of Japan looking to get a feel for what the cost would be of intervening, right? Because there's obviously a cost associated to that. So that's what people are speculating, is that there was a rate check. It wasn't an intervention per se, but the possibility that Bank of Japan was trying to get a feel for the market and see how much it would run them. And the actual pip move was 192 pip candle, which was pretty crazy, right?
Yeah.
Usually that's pretty common when it comes to Bank of Japan interventions, is you see a wick, a very wide candle. Sometimes it's like 400 pips. I think the last one was 400 pips. And then you see it kind of chill out, and then you see the follow through after that. So the flow data will come out next business day, which in this case will be Monday. And then if there's a confirmation that the Bank of Japan actually did go ahead and purchase some yen, then perhaps we see some follow through, and that's the price action we're going up against next week.
Yeah, I saw the meeting yesterday, and I think they voted 8-1 to keep the rate
8-1 vote. Mm-hmm.
Yeah, only one vote to actually hike to 1%. So that isn't really strong for the yen. That should keep the dovish story in play. But yeah, I'm trying to position myself for a possible intervention. I do think it's exactly what you mentioned, the sort of a rate check, and they were calculating how expensive would it be to push the price a lot lower. But I think, what do you think about levels? Maybe 160 is a good level to start to pile into shorts. I'm looking at 160 and possibly, let's say, 161.
I would say those are good levels, 160, 161. But the way to survive the move, honestly, would be just having the wide stop, right? Like the way I would approach it, and perhaps the way I will approach it. And if the momentum doesn't continue next week because the flow data doesn't suggest that there's an intervention, then there's no reason to be in the trade. So perhaps the approach I'll take will be, just get in the market, right? Even if it's right now, for example, very, very low size with a very wide stop to just stomach the move. And if the confirmation is there, then you actually, put in some more size to get into the follow through. The tricky thing about waiting for after the data with an intervention like this is slippage, because things move very, very fast. So if, worst case scenario, I get in with a super small size, I stomach the move or whatever, and I don't make as much profit. Okay, cool. But that's kind of the risk, is if Bank Japan just didn't, do any moves, and then the trade just comes out to be nothing. But do you have a certain way you would go about it? Or 160, 161 is your level?
Yeah, I think I'm looking at 160. I don't want to take a short just yet because I'm a bit uncertain on the dollar. So the dollar could still sort of naturally lose value as we get more sell America narrative, which so far seems to be sort of muted. But if we get more sell America, then this thing is not going to go higher. And I don't want to be stuck in a short where the swaps will be pretty expensive to hold, especially on retail brokers. So I do have an alert at 161, but I'm going to move it a bit lower. I may actually try to take a feeler position around, let's say, 159.5, just a small position just to be in, and then pile into more positions at 160, 161. And as you mentioned, a wide stop loss is an absolute must, because if we get to 163, we are still very likely to get an intervention. And if we go to 164, an intervention is pretty much guaranteed. So that's sort of the conundrum with this setup, because you want to get in, but if you get in now, your stop loss needs to be massive. But if you don't get in now, you may get a premature intervention. So the sort of the reward to risk and the probabilities get much better as the price keeps going higher and higher. That's the tough thing with this trade. But I'm definitely looking at it. I'm probably gonna put it back on my watch list for now. And you are in dollar Swiss, I believe.
Yes, we're back to where we started, Marco.
Yeah.
Sucks,
Yeah.
but you know, we're keeping it alive, and if we get stopped out, so be it. But we're actually seeing not so much dollar weakness. Like we did get our services PMIs today. I'll pull that up for you guys here. We missed across the board, but we were still above 50s, so it wasn't like horrendous or anything. But we missed expectations. You can't deny that.
Yep.
The case is not so much as dollar weakness, but I think it's just a lot of other currencies are catching some strength here. So we had Aussie dollar in the beginning. You know, there was some data out there that was promoting that hawkish stance of the Aussie. Same thing with New Zealand as well. And then last night you had the UK picture turning around a little bit. You had retail sales do good. You had some inflation data for the UK also coming out pretty well. So that obviously, you know, trimmed some bets for rate cuts for the Bank of England. And so now we're seeing the pound getting some really, really strong relative strength against the dollar. So I think that's what's really weighing on dollar Swiss at the moment, because the Swiss basket alone was pretty weak, you know, earlier in the week when we saw this upward move here. And now it's pretty much stalling out. So I'm just going to stick with the level. It's a good technical level, right? You
Absolutely.
can't deny it. It just looks good. So if we break below, we break below. And most likely, if you break below, there will be some follow through with that. So maybe it's an opportunity to switch sides there and just catch the move down.
Yeah, and the swaps are positive, which is always nice. So if the trade lasts for 1 to 3 months, it's going to be a lot of positive swaps. So I don't mind that at all. But as you mentioned, if this level breaks, it's going to be definitely we're going to get some follow through, because this level has been defended, I think, 5 times already. And the SMB might be tempted to maybe even defend the level. Who knows? So I like the position as well, even though it's at break even. And with Trump, we pretty much had a full-on taco trade. I think the last time that I checked Financial Juice, we had so if we scroll a bit lower, Trump formed a framework of future deal on Greenland. Denmark rejects Trump demand to negotiate, and then the key one was Trump on using excessive force. I won't do that. So I would say the sort of the taco trade is in full force. I think the S&P completely retraced. NAS is right behind it, and we have the Nikkei going higher as well. But the dollar doesn't really seem to be moving back to the previous levels. So the dollar is still pretty much negative and bearish across the board. What do you think about that? Like we got a taco trade on the stock market, but not on the dollar. I think that's pretty interesting.
Yeah, I think we got you know, the fundamentals for the US are looking pretty well. And it's actually, you know, it's the Fed needs to cut rates, right? It's what the president wants, but it's also what the data shows as well, that they're able to cut rates. They're in a healthy position. The real benefactors of the whole taco trade, in my opinion, was a risk on flow.
Yeah.
So it was originally risk off, and then, you know, back to risk on. And so you have, you know, the S&P benefiting from it. You know, we were below these moving averages, which were important, right? If you would have continued this momentum, we could have very easily saw, and I think most people would agree at the time, 6,500 on the S&P. On the NASDAQ, it would have been something like 24,000. That was the scenario. But I guess, you know, this market is resilient, chugging higher as far as equity goes, which is kind of scary as well, because you still see gold elevated. You still see metals at all-time highs. So are we risk on or are we not? That's kind of the thing that scares me a little bit here is maybe markets are super sensitive, because, you know, this was like that. The whole risk off narrative that we saw was really, really, you know, the S&P was very sensitive to that. The dollar was very sensitive to that. So I think any more escalations or anything like that is just going to fuel metals and really take a toll on anything America, in my opinion.
Yeah, I'm with you. But it has been pretty interesting to watch the developments, and like the S&P going up while gold is rocketing higher, silver is rocketing higher. It's not a usual occurrence. And so are you looking at the Aussie dollar? Because I'm looking to potentially buy the Aussie dollar before the CPI next week. Okay, so it's continued with exploding higher. But something that I've noticed is if you look at the Forex Factory, the inflation number, the MI inflation gauge, was pretty high. So this was a print from Monday, and this was the Melbourne Institute inflation print month on month, I believe, yeah, and it was pretty high at 1%. Usually what happens is the Australia CPI print lags behind this print. So this print is a leading indicator for the CPI inflation. So if this indicator came in hot this week on Monday, I'm actually expecting the CPI next week to come in also at 0.9 or maybe even 1%, which should be bullish for the Aussie, which should be hawkish for the Australian Central Bank, and maybe it could guarantee a rate hike. So I think if we do get a rate hike, or like 100% chance of a rate hike, this thing can continue going higher. So I'm actually looking to play Aussie dollar longs, or maybe even pound Aussie shorts before the CPI. Although looking at the price, it looks very much overextended. So my question is, would you consider getting in at this level, or would you absolutely need to see a pullback if you were looking to get in?
I have two scenarios, but the actual foundation of them both is I still want to participate in the Aussie dollar long. So essentially, let me pull up my screen here. Oh, my bad, Marco. Essentially, what I see here is the Aussie dollar is at this very important level of what could be resistance. It's not set in stone like anything. However, if you do get a break above here, then perhaps this is a break and retest, and now this turns into a solid level of support in the future, right?
Yeah.
Maybe the dynamics are shifting longer term, where you can actually justify this being a longer term level of support. The only risk to that is that it's a fake out, but that's just kind of the risk that you accept before you get into the trade. So first case scenario, you go ahead and see a break above this, a retest, and then you buy it here, and then you take it long, right? And if you look left, you have a couple levels you can eye. You have this right here, you have this right there. So you have some targets at the moment. The other likely scenario, or not the likely, but the one I prefer, is if we get some kind of a cool off in the Aussie dollar until the release or something like that, to bring it down lower. So you're actually buying underneath that level. And even if it's a fake out, it doesn't really hurt you as much. And if I just put a fib from low to high here, this recent move, I would like to ideally get something like this. I'm going to go to the 4 hour so it's easier to see. But fib from low to high, where price is at the moment, that 61.8% retracement level is right here. The 50 is right here. And so if you just look left, perhaps this is a level of, this was once resistance that could turn into support. So maybe we pull back into here, by here, and then you can target that higher time frame level resistance, and then continue to get the possibility of a breakout, and then just trail it higher there. But that would be the latter would be my preferred. However, if I don't ever get that, which given my previous history, it seems like I don't get the pullbacks immediately. So I would probably have to wait for a break above this and retest if the Aussie just continues to see this monster momentum that we've been seeing.
Yeah. And also there's a thing with the 10-year bond rate differential. So way back a few years ago, currencies used to move with the rate differentials. So as the central banks kept changing the rates, and as inflation played out, the currencies would usually follow the rates. Well, the Aussie dollar has recently decoupled from that, and the rate differential has recently exploded higher, while the Aussie has been mostly stagnant. So looks like we're finally getting some movement here, and looks like the Aussie is starting to follow that rate differential. I can't bring it on TradingView at the moment, but I'll try to do it for the next stream. And also Aussie is known as a commodity currency. So silver, gold exploding higher. It should be bringing up the Aussie up as well. So finally we're getting that reaction, because we have been in a range for quite some time. ever since, let's say, the 26th of June. We just were super flat. And I'm completely with you on that I've had so many examples last year where I was right on the analysis, right on the direction, but I was too slow, looked for a pullback, never got it, and the price went flying without me. So that's actually something that I wanted to change for 2026, to be a bit more aggressive with the entries. So that's why I'm looking to maybe even just get in before the CPI, get in long AU or get in short pound Aussie. I would prefer AU, if I'm being honest, to hedge some of the dollar Swiss exposure, but we'll think about it.
Speaking of commodity currencies and them doing pretty well, what do you think about like silver? Are you playing silver at all? Like we're about to hit that 100 handle, like literally, probably in the next, between the live stream is still on, we're probably gonna hit that 100 handle. Are you trading it? Do you see anything opportunistic about that?
So for silver, my last trade was a short. So I tried to call the top. Let me bring it up here. Silver. Right there, tried to call the top. Then we got a massive risk-off situation, and I closed it for a small loss, fortunately. Didn't wait for the full stop loss. And at the moment, I'm leaving it alone. So I don't want to sell it, but I don't really want to buy it either, because I think it's overextended. I think it looks parabolic. And I think gold is a much safer play. So I'm focusing on gold, looking for pullbacks, but also gold looking crazy at the moment. From my research and backtesting, when silver makes 100% or more in a year, usually the year after that is break even or negative, which means the historical data is telling me that we're going to end the year. Whoop. Let me get my tool. That we can end the year like this, for example. Of course, that's not a guarantee. That's just the data. But gold is known to just keep on trucking higher. So gold is specifically an investment vehicle, while silver is heavily used in the industry as well. So gold doesn't look as crazy, doesn't look as parabolic, and I think it's a safer, better play if we get pullbacks to the 20 MA. So that's my main thing that I'm watching. What about you? What's your take on it?
I was actually going to ask a question. One last question before I go, because I know you have your solo segment.
You can say more if you want. Absolutely.
Alrighty. I know a lot of people have this question, and I'm not an avid gold trader by any means, right? This is not my, I'm not super experienced in this, but I know a lot of people have questions on how to participate in gold, especially when you're seeing this continued momentum. It's very natural for any human being to get FOMO. How does someone that doesn't have any positions on participate in gold when it's looking like this? Do you have experience doing that? Like, what have you done in the past to kind of let you continue with, like, look at this price action?
Yep. It looks pretty crazy. I would say, from my experience from last year, because I've been watching this explosion and I've only participated a couple of times, so I wasn't really a big player in gold. I would say don't jump in at the all-time highs. If you're in the A1 Discord, I would look at the signals from Nick. I would do some back testing, so see how he traded gold in 2025 and which levels he used to enter. You're going to notice it's mostly the levels that are close to the 20 MA as well, or some big support areas. And that's the exact recipe that I have. Not chasing the highs, trying to ignore FOMO and waiting for that pullback, and then you're in. So just staying patient. That's my best advice. Staying patient, looking at what Nick does, because Nick had some really, really awesome success in 25. And you're going to notice his thinking, his analysis, his breakdown, and the levels he's looking at, or he was looking at to get in. Most of them actually worked out. I think gold was his best performer in 25.
Yeah, crazy trade. Congratulations to Nick. That's like fantastic.
Absolutely.
That's like the ultimate momentum trade there. And the perfect asset to do that with is something like gold, right? Where naturally just drifts higher over time. Yeah, that's kind of the thing that I kind of want to implement, going into 2026, or now that we're in 2026. It's not that I don't watch gold. I watch every single chart from bonds, everything, because they are correlated in some way, but I don't have the experience of actually navigating the markets, that's a different level, right? That's an experience that you have to kind of learn by actually doing it. So I definitely want to participate. But the thing is, we're at all-time highs. I'm not to me, I don't feel comfortable buying, like, even on short pullbacks. It's kind of scary to me, because the way I see it is you have all this downside momentum. And I guess because I'm used to trading currencies where they're mean reverting, right? So like there's somewhat of a cap usually when it comes to currencies. When they drift higher, sooner or later they just go back to the mean, or to the other end of the channel. And that's not the case with gold, right? This is a different animal that I need to learn. So thank you for that.
Yeah, no worries. And do you have anything that you added on your watch list since Tuesday, since the last time we talked?
Not really. I mean, Aussie dollar is up there. Pound dollar's picking up some steam. If we continue to see, the pound continue that strength, then maybe I look for a pullback in the pound. But really, I'm just the thing that I'm doing is just seeing if this dollar play works out. Because if the dollar Swiss play works out, then that means the dollar counterparts are taking a hit. So I don't want to participate in, like, for example, a pound dollar long if dollar Swiss is long, right? That just means that I get a better retracement, a pullback on the pound to ultimately take it long whenever I'm ready to get out of this dollar Swiss position. But we'll see. There's I'll know pretty soon, or we'll know pretty soon, if dollar Swiss breaks this level or not, because we're hanging out here for some time. And if we do break below, if we just look previously, whenever we break a very important level, there's lots of follow through to it. So we'll know.
Yeah, we could definitely slide lower. Definitely.
Like, this is a weekly chart here. This was like another level that was respected. 1, 2, 3, and then we ultimately broke below. We got one pullback, and then ever since then, you've been trading below it. So that's how dollar Swiss reacts, honestly. So something to be mindful of, and we'll see. We'll see if we take the loss, or if the taco trade lives on and we get some upside.
Hopefully it lives on, because it's so easy. It's like a money printer machine. When Trump says something, crazy announcement, markets drop, you buy the dip. 2 or 3 days later, Trump is back and he says no tariffs, markets go back up. So unfortunately, it hasn't worked yet on the dollar at the moment, but on the stock market, it worked pretty well even this sort of most recent time with the SPX and the NAS. And one more question that I wanted to ask you today. So we're getting this sort of sell America narrative. And from the reading I'm doing, from my research, I've noticed that a lot of European hedge funds and investors are kind of threatening to sell US assets and sort of hedge against the dollar. But do you think that it's something that's going to happen? Because in the past, if you were a European hedge fund manager or an investment banker and you weren't heavily exposed into the US, you would most likely get fired. Reason being, the US always outperforms everything. So if you're not in the US, you're basically having very poor performance. So what do you think? Will the sell America actually continue, or is it just sort of a fade?
Just my personal opinion, I think it's like an opinion. I think it'll fade. I think it's a threat. The US is the most attractive equity market, in my opinion, or the more established one, I would say. And like you said, a lot of people, like, even when you look at the wealthy class, like, they want to be able to say, yeah, I'm invested in NVIDIA. I mean, especially when you're seeing these crazy moves in tech. Well, maybe not so much right now, right? But Apples and all this stuff. Like, yeah, I'm invested in the US. The US is the legacy stock market, right? So it's definitely a risk, though. They have the ability to. You'll definitely that headline or that narrative will definitely be front and center if it does become a real risk. Just like anything, if it does start to heat up and it becomes a probability that that's the case, then you will see those things. I remember, what was it, last year? China was threatening that. They had a lot of treasuries they were looking to unload whenever the initial tariffs, and then Trump just kept going, well, now I'm going to throw 100, now I'm going to throw 125% on top of that. So China was like, you know what, man, we're just going to unload a bunch of treasuries, and then things settled. So I think it's just a scare tactic or threat tactic, but we'll know if it becomes real or close to real.
Absolutely. Yeah, I think every few years, Europeans and China and everyone outside of the US threatens to exit the US, but the returns are so high and so juicy if you're invested into the US that I just don't think people are going to exit. You know,
Yeah, I
if the
agree.
returns don't lower, there's no reason to exit, and returns are still super high in the US stock market.
Mm-hmm. Yep, I feel you, man. But I will let you go to your solo segment. I believe you have
Sure.
some stuff to give out, giveaways and all that good stuff. So I will leave you to it, guys. Have a blessed rest of your day, Marco. You too, and have a great weekend ahead, guys. Bye bye.
Thank you, Alan, and see you next time. Goodbye.
All right, man.
So, time for my solo segment. This was really entertaining, and you can catch me again with Alan next week. I think it's going to be again Tuesday and Friday, but you'll get the full schedule on the A1 Trading website. So these are, for me personally, the most fun segments of the stream. So you go to A1 live stream schedule, and here you can find basically all of the schedule. So what do I have for you today? I have another DNA funded challenge giveaway, but there's a different format. It's no longer the quickest hands. It is now, you need to fill out the form. So in the comment section, I will now post a form. Okay, it's already in there. James posted the form. So go to that link, fill out the form. Let me show you. I think I have it here. Do I have it? Yeah, this is the form, link in the description. Fill it out, and you will enter the giveaway. In 5 to 10 minutes, I will use the wheel of names. I'll post all of the entries in the wheel, and then we'll spin, and we'll see who is the winner. I will then contact you. If you're a winner, I'll send you an email with the code after my segment. So now, time for the analysis. I'm seeing MSFT. What is happening with MSFT? Well, it's going higher. It's not like a extremely massive move, but definitely a big blue candle. Interesting. As far as my watch list goes, I have the dollar Swiss. It's at break even, but I'm collecting swaps. Always nice to get swaps. Pound Aussie, I'm looking to take a sell setup. We have finally broken a key level of support, which is right here. I'm now looking for a retest of that support level or a retest to the 20 MA. And then I'll be looking for sell entries. I have an alert set. And of course, if you're in the A1 Trading Discord, you will get all of my trades. You can join the A1 Discord by clicking the link in the description and using the code Marco to get 25% off. That's 25% off on the Edge Finder, 25% off on the A1 Trading Discord as well. Aussie dollar, love the currency. Finally woke up, finally broke higher, finally getting volatility. I told you about the lagging indicators. So if you look at inflation in Australia, CPI is the main inflation number. Just remove this. Actually, my code is 40% off. So the code Marco gets you 40% off, on the Discord and on the Edge Finder. So thank you, James, for the heads up. Forex Factory. This week, what happened? Monday, Aussie, MI inflation gauge. That is the Melbourne Institute inflation gauge. It was pretty high. Actual number 1%. So it was a pretty big surprise. What do we know? That this is a leading indicator of inflation. If the MI inflation gauge comes in hot, usually the CPI follows with a hot print as well. So next week on Wednesday, I'm closely watching the Australian CPI because I'm expecting the actual number to be 1%. If it is going to be 1%, that should give the Australian Central Bank, RBA, enough ammo to hike interest rates. Hiking interest rates is bullish for the currency. So if that happens, we could see a 100 pip move higher, I would say. Definitely could be possible. So we can see 50 to 100 pips move higher on the Aussie dollar. So that's what I'm looking at. One thing that is a problem, if I want to position myself long before that event, the problem is that we are very much overextended on the daily chart. So the 20 MA is very far away. This looks parabolic in my opinion. So buying at these highs is not really the smartest thing to do. Okay. So let me just see something. Okay. Just a second. So just a second. Okay. Back to the charts. Yeah, Aussie dollar. That's my game plan. Gold, I want to buy it. I already listed all of the reasons during the joint segment, but gold definitely looks nice. Okay, so gold definitely looks nice. I do want to get a pullback. Just for me to check, are we capturing the email as well? Okay, so it looks like we have lost the email capture. Okay, so that's a bit of a technical difficulty. Okay, we're gonna think of a way to solve this. Anyways, for gold, looking for pullbacks to the 20 EMA. Rest of the stuff, Bitcoin, Ethereum, kind of doing nothing. Bitcoin is flat and range bound right here. So Bitcoin, I don't really see much. Then we have, okay, just a second. Let me check something. We're figuring out the form. Email page. Okay. Okay. So indices, S&P up, NASDAQ up, US 30 negative, Russell negative, DAX is up. DAX actually looking pretty nice. Nikkei looks really nice. I know Nick took a buy setup right here around the 20 MA. So yeah, there is a form in the comments. If you want to get the free DNA funded challenge, make sure to fill it out. I'm looking for possible buy setups on the indices. I just am not sure. Let me see what the Edge Finder says about the Nikkei. So Nikkei, very bullish reading there. What about the SPX? Neutral. NASDAQ. NASDAQ is neutral as well. Okay, NASDAQ is neutral as well. Nikkei has the taco trade. This sell-off was basically because of Trump, and then we had a pretty quick recovery. That happened on most of the indices, but the Nikkei definitely had a pretty significant reaction. What I was looking for on the DAX is I was looking for a bit of a slower correction, a bit of a slower pullback. So this pullback was pretty aggressive. At this point, the DAX looked super bullish. Okay, at this point, the DAX looked super bullish. But then we had a massive drop. We had a massive crash. So I no longer like the DAX that much. Top setups, if you search up for the DAX, I think we have a neutral reading, which is not really great. It's even a negative score. I definitely want to be in line with the Edge Finder. I want to basically go ahead and buy the DAX if there is a bullish score. So the DAX is no longer that interesting to me. Okay, now time for the giveaway. So let me set everything up. Give me just 1 second. We have the wheel, which is set up. We have the Google Forms. Let's see, can we do the first name and the last name? For the text, I don't think so. Let's do it like this. Wheel. Okay. And let's see. Okay, so we have Lan Ti Hong. Let me see if we have all of the information for you. We do. So we have your email. Everything is set. After my segment, I will email you the free code. It's a one-phase 10K DNA funded account. So this is our winner for today. If you want to get funded with DNA, we have the code A1 Live. Gets you 25% off on any DNA funded challenge. Okay, so A1 Live, 25% off any DNA funded challenge. By the way, this is my personal account, which I unfortunately failed. So passed phase 1, passed phase 2, and unfortunately failed on the funded stage. Again, just one account, time for a new one, and this challenge is purely traded by ChatGPT. So this is a YouTube series that I'm doing where I take trading signals from ChatGPT and I put them into a funded account. So ChatGPT passed phase 1, passed phase 2, and basically lost the funded stage. But yeah, time for a new account. So this code, 25% off, make sure you check it out. Let me just see the comments. I submitted that my name wasn't on the wheel. Yeah, sorry about that, guys. I've had some issues with the Google form because some of the emails were not captured. So don't worry, we're going to fix it for the next stream. We do have more accounts to give away, but for this one, unfortunately, not all emails have copied on my Google form. So join in next week on Monday because we'll have everything set up. We'll have everything fixed. The winner is set for today. So we have the winner. He's going to get the account for today, but we do have more accounts to give away. So join us on Monday. To finish up, still have a few more minutes. What can we take a look? If you have any requests for analysis, put them in the comment section. Okay. So we went through my watch list. We went through the indices. We went through crypto. We can do the metals market. I told you my take on silver. So as far as silver goes, these levels are pretty much overextended. I'm basically not looking for anything. I'm focusing on gold. I definitely don't want to sell. I don't want to buy either. It looks pretty crazy right now. It looks pretty much overextended. So silver, I am leaving alone. As far as platinum goes, we had a breakout, a pretty massive breakout. So pretty nice bullish candles, although platinum is not something that I'm actively trading. Copper maybe will break out as well. So for copper, we can look at this level. If that breaks, then we can go a lot higher. From all of the analysts that I've been watching and reading about, most of them are very much bullish on the metals market. So that's gold, silver, copper, platinum, everything that's basically a metal, not just the precious metals. Solar panels is a big reason why silver and gold, or not gold but copper, are important and could appreciate in price as the production of solar panels expands, because every single year there has been more and more solar panels produced. VIX, after the Trump taco announcement, we went up, but now it's falling lower. US oil appreciating, not sure why. I don't think we had any concrete news that would have pushed oil prices higher. DXY falling. So looks like the DXY is still falling. Looks like there is still a little bit of sell America narrative present in the markets. So the stock market is rebounding, but the DXY is falling. That's an interesting phenomenon. JXY, not a lot of activity. Not a lot of activity on the JXY. I am looking at the UJ. So USD JPY. I'm looking at a possible intervention on here. So I have the 160 level, which would have been the best. I don't want to sell right there because I could get stuck in a position. It's a negative swap position, which could be pretty expensive to hold for 2, 3, 4 weeks. But if we go to some higher levels, the higher we go, the bigger the chance of a possible intervention. Okay. So the higher we go, the bigger the chance of an intervention. The crucial number, sort of the number where an intervention could be almost definite, is 164. I think 164, if we go above that, they're going to intervene 99.9%. So far, the path of UJ has been higher. There's still an uptrend. 20 MA is getting respected. I don't see any reason for this to keep dropping or to start dropping, except if the dollar strength continues. But so far, it's holding up pretty well. I mean, DXY dropped heavily, while UJ, if we go back to UJ, hasn't really moved. The move in UJ is not really that big. There was a bit of a sell-off, but nothing significant. Alan talked about this being kind of a test for an intervention. So the BOJ came in, sold the dollar, bought the yen with just a small amount to see how expensive would it be to push these markets lower. By the way, usually when there is an intervention, there is usually I think a 3 to 4% move lower. The last time it happened was July 2024. Yeah. So this candle, for example, we can measure it. And it was right around 2.6, but we continued lower and then we just started crashing lower. So that could be an intervention, but also what could happen is the BOJ could intervene and then we get a recovery back to the highs. It's not a guarantee that the markets will continue dropping after an intervention. So it's going to be pretty interesting to see what happens. Let's check out the bonds. Bond yields falling a bit. What about the JP 30-year? Falling as well. So the 30-year yield in Japan almost hit 4%, now starting to retrace. I mentioned that there was a BOJ event. So if you go to this week, we search up all currencies. We look at red impact apply. So we got the BOJ at 4 in the morning my time. They kept the rate the same. And if you look at the votes, I think it was 8-1. If we go to financial juice, let's try to find it actually. It should be under Forex. So under Forex, if we scroll a bit lower, yeah, somewhere in here. Yeah, here. So Bank of Japan, Japan's recent potential growth. See, only one person, BOJ board member Takata, proposed raising short-term rate to 1%. Only one person. So the rest of the gang were down to keep the rate the same. They were down to keep the rate to 0.75. That's a bit of a problem for Japan, I believe. It doesn't really create a lot of confidence in the BOJ or Japan. Markets are definitely reflecting that, or have been reflecting that, with just massively selling bonds. So the bond yields, the long end of the bond yield exploded higher. And if you look at the edge finder, if you look at the real yield heat map, you're going to notice the real yield in Japan is still pretty negative. So this is your interest rate, this is your inflation. That means your real yield is minus 1.35%. That's lower than pretty much all of the economies. So BOJ and Japan, they definitely don't want you to keep your money in the bank. In Japan, they're pretty dovish. The PM is pretty dovish. The Nikkei is flying, reflecting all of the dovishness, and that's the current situation. That's the current situation in Japan. So buying the Nikkei, that's a nice play. selling USD JPY on a possible intervention, that could be a nice play. And then after that happens, what I personally forecast, if they don't aggressively raise the interest rate, I think we're just gonna, it's gonna look like this. So we're gonna drop 3 to 4%, and then we're just gonna keep on trucking back up to the initial levels. So you can make money in this, in an intervention, and you can also make money if you just buy UJ as we keep going higher, because the policy stays dovish. Okay, so let's see the final comments. Let me take a look. USD SEK. That's going to be the final one for today. USD SEK. Swedish krona. What is happening here? Looks like the dollar is heavily falling against the Swedish krona. Interesting development, although I'm not looking for active trades on this. Do we have it on the edge finder? I don't think we have the Swedish krona. If you're a technical trader and if you have a fundamental reason to be short, this may not be such a bad play. If you can wait for a bit of a pullback to a 20 MA, I think it's pretty good to look for a sell position. Of course, I don't have the edge finder in line with this. We don't have the data on it, and I don't really see a clear fundamental edge to sell this chart. So purely based on technical analysis, I'm not going to do anything. That's about it. Thank you very much for watching. We do have more DNA fund accounts to give away, so make sure you join us next week. I'll be streaming pretty much every single day, and we're going to work on the form. I'm going to have all of the emails, all of the information, so we're going to fix the small issue we had today. Thank you very much for watching. Good luck in the markets. Watch out for that gold move. I'm going to keep on watching this, and watch out for the yen. Watch out for USD JPY, possible intervention. So that's it. Good luck. See you next week. Yeah. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.